Hello, my name is Doug Dean, and I'm joined today by my colleague Maddie Schueler, and we're going to have a discussion about actions that might be taken or at least considered in response to the prospects of tax law changes coming out of the new administration. Last November, Maddie and I wrote an article about proposals for tax law changes made by the Biden campaign and other Democratic issuances. And we covered a lot of potential changes, or at least proposed changes. Today, we're not going to go back through those. You can reference those through a linkage to that article. But today we're going to focus just on things that you ought to be considering in your own planning in relation to federal tax matters. So we're going to have a bit of a discussion about a few of those items. We've got 5 or 6 items we want to address with you. We're going to start with the prospect for changes in federal transfer taxes. And by transfer taxes, I mean primarily estate gift and gift taxes, also to some degree generation skipping taxes. And Maddie, can you tell us a little about what people should be thinking about as they may get involved in estate planning relating to those transfer taxes?
Sure. So for transfer taxes, there is a lifetime exemption amount, which is the maximum amount that an individual can give away through lifetime gifts or at death without triggering that transfer tax liability that you mentioned. And currently that amount is $11.7 million per person. So it's a fairly large exemption amount. President Biden has proposed reducing this to $3.5 million, which is actually its 2009 level. So he's proposed reducing that pretty significantly. One thing to keep in mind is the Tax Cuts and Jobs Act, which was enacted at the end of 2017. It increased that amount from $5 million to $10 million, adjusted for inflation. And that increased amount is already set to revert back to an inflation-adjusted $5 million in 2026. So high net worth individuals may already be thinking about that exemption amount going down in 2026, but with these proposals from President Biden, they may want to start considering that sooner, because of course he may drop that exemption amount sooner than 2026 and perhaps even further than it would revert back to. So he may decrease it to $3.5 million, which would be a substantial drop. So, one thing to consider is that individuals could perhaps, if they find themselves, in this situation, make a gift now, and that would be below the current exemption amount, but in excess of a future amount, and potentially avoid transfer taxes. The Treasury Department has already issued some regulations saying that they would not claw back into taxable transfers any gift now that would be in excess of a future exemption amount.
And I guess the $3.5 million threshold that President Biden has proposed would lead one to think that if, say, a person or a married couple have not made taxable transfers before and used any of their exemptions, the candidates for making current gifts would be those who have estates exceeding the $3.5 million for a single person,
right,
or $7 million joint. And so those are people. If you're going to make a gift less than that, and that's your circumstance, it's not clear that you've accomplished anything.
That's right. I agree.
Unless Congress would act to even decrease the exemption below the $3.5 million per person.
Right. I think that's exactly right.
Okay. So let's turn now to income taxes.
Okay.
And I know that the proposals we wrote about earlier generally are directed toward higher tax rates for higher income people.
Yes.
and tell us a little about that situation and whether there are things that people ought to be thinking about doing now or in the near future because of the prospect of higher rates.
Right. So as you mentioned, President Biden did talk a lot on the campaign trail about raising taxes for higher income individuals. One specific number that he mentioned was individuals earning more than $400,000. And so there's the potential that tax rates could increase for individuals who find themselves in that situation. And I think some things to consider, and this is probably contrary to the typical tax planning that we think about, but is actually accelerating income perhaps into the current year or into years when the tax rates presumably are lower than they could be in the future. And there are a couple of considerations people might think about. One is perhaps increasing retirement distributions. Generally, this would apply to individuals who are ages 59 and a half or older, because typically a penalty would apply to individuals younger than that who take retirement distributions. Another option that really everyone could be thinking about is perhaps converting a traditional IRA to a Roth IRA. So when you make contributions to a traditional IRA, those are tax deductible, whereas contributions to a Roth IRA are after tax. But the benefit of a Roth IRA is that individuals can withdraw money from the IRA tax-free. So a Roth conversion could be something that people are thinking about because that converted amount would be taxed at today's rates and potentially avoid higher rates in the future.
I think those are interesting planning ideas for people, and I guess on the conversion or even prematurely withdrawing more than a required minimum distribution from a retirement plan, those are not all or nothing situations.
That's right.
You can convert a portion, for example, of a traditional IRA to a Roth IRA and not the full account.
Right, that's exactly right.
So there's some opportunity there. We don't know if these changes will occur, nor can we know when they would occur. Mm-hmm. So, unfortunately, in the tax world, sometimes if you wait on these things, you can be too late because they may have an effective date when legislation is introduced.
Right.
Sometimes they're not effective until a later date. So it gets a bit tricky in terms of knowing what to do.
Yes.
I guess I would think that it's pretty safe to say for higher income people, there's a much greater chance of higher rates than lower rates for the foreseeable future.
Right.
So this is not something that someone automatically needs to do.
Sure.
But I think we'd say it's something that people ought to consider.
Right, I agree.
Okay. Well, what about capital gains? Was there anything specific in President Biden's proposals about capital gain taxation? And if so, what should people be thinking about in regard to taking capital gains?
Right. So as you know, capital gains have the benefit of being taxed at a preferential rate. And President Biden has proposed for individuals who make more than $1 million, and some of that would be capital gains, that he would increase the rate on capital gains over $1 million. So right now the top capital gains tax rate is 20%, and he has proposed increasing that to the ordinary income tax rate, which under some of his proposals could be almost 40%. So, and so there is potentially the potential for capital gains taxes to increase. And so higher income individuals who do have capital gain property might consider, if they were already maybe on the fence about disposing of that property, maybe doing it sooner rather than later. It's something to keep in mind. I don't know that it is necessarily something that requires immediate action, but for people who are already, like I said, kind of on the fence, perhaps thinking to part with that property, it could be something that they consider. And again, this would only be, I think, typically for those higher income, higher net worth individuals who might be affected by his proposal.
Right. And once again, I think we would think that high-income people will be facing, if they're facing a change in rates, it'll be higher, not lower.
Right.
For the foreseeable future. So there's a chance perhaps to beat higher rates by making transactions now. And of course, on any of these things, when we're talking about selling appreciated assets, there always need to be investment considerations
Right.
along with tax considerations. So, but I think you're right on your comments about that. Now, Maddie, what about like-kind exchanges? Like-kind exchanges have been in the tax law for a long time. And what happens in like-kind exchanges is if you meet the requirements of the rules, you're not taxed currently, but you have a carryover basis into the newly acquired property.
Right.
The property acquired in the exchange. And in that scenario, in effect, you're deferring taxes, although if an individual dies owning the property, they have an opportunity for a stepped-up basis at death, at least under current and long-standing law. But was there anything in the Biden proposals about like-kind exchanges? And in asking that, I am reminded that like-kind exchanges have already been restricted to real estate, whereas not long ago and for a long time, they were also available for tangible personal property,
Right.
equipment, vehicles, and so forth that are used for business purposes. But talk to us about like-kind exchanges as it relates to the Biden proposals, please.
Sure. So as you mentioned, it is interesting because the Tax Cuts and Jobs Act was the law. Of course, we've mentioned that a couple times that restricted those like-kind exchanges to real property only. And President Biden has actually proposed eliminating like-kind exchanges, even for real property. So I think individuals who have property they may be thinking of exchanging or that they were thinking of parting with, it may be a time to act again sooner rather than later while that exchange window is still open, before perhaps it closes in the future. So, and that might mean putting property on the market or completing an exchange or perhaps accepting an offer that someone otherwise may not have.
I think you've said that well. That's the kind of thinking that may enter into that, because it does seem to be a chance that exchanges won't survive tax law
Right.
changes. Another area that we have recognized might have the potential for either action or delayed action relates to a new first-time homeowners purchase and a tax credit associated with that. Would you speak to that, please?
Sure. So President Biden has proposed a $15,000 tax credit for first-time home buyers, and we don't have too many details, but that's what he's proposed. And it is interesting, as you know, we've talked a lot about actions that individuals might take sooner rather than later, but this might be an area where it actually might be beneficial to delay. If someone is considering buying a home for the first time, they might consider delaying, closing on that home to see if this change actually comes to pass, because it could be a potential benefit for them.
Right, and it seems to me that $15,000 for a first-time home buyer can be a significant
Right.
Aid in being able to finance a home purchase.
Sure, absolutely.
So, Maddie, thanks. I think these are the out of all the proposals that have been made, most, there's not really anything can be done now.
Sure.
But I think you've covered the ones that do deserve some current consideration, and it can be important, particularly for higher income people or higher net worth, to be exploring what they might be able to do now that may help them
Right.
later.
I agree.
So I appreciate your participation in this, and for those who might be our audience for this, we'd welcome questions or comments.